Welcome to Buy, Hold, Sell. I'm Jeremy Hook from TMS Capital. Today on the panel we've got Rhett Kessler from Pengana Capital and Matt Williams from Airlie Funds. Now there is a growing expectation that there may be a change in federal government in 2019, and certainly this is worrying some investors. We want to look into this and see what investors might need to do, and I guess starting with you, Matt, going back over history, have these been things that people should be aware of, and maybe some examples for our viewers?
I think over history, change in government has been more bark than bite. You know, there's always a lot of talk about what's going to happen, but generally, you know, the market takes it in its stride. This time, I think, in my experience, we'll probably see, I think a much more bite. I think there's much more, thinking around regulation, the sort of populist sort of policies that that governments are now sort of, focusing on. We've seen the introduction of the bank levy. So I think this potential change in government, if indeed we do get one, there's going to be a lot more noise and a lot more substance to changes that can affect companies and investments.
Okay, thanks. Rhett, I remember being in '96 very pleased about the opportunities in the market with the Howard government coming in. Didn't really sort of fire up the market in the way I thought, but are you agreeing with Matt, this time might be a bit different?
Yeah, I think he's right, and I think there's probably two phases. The first one is the lead up, where you're going to get a lot of political footballs, and the timing with the release of the Banking Royal Commission outcome is going to be, I think, very, very interesting. We've already seen some political footballing on health insurance and what the increases should be there. I don't understand how those are going to work. We've tried to work those out, but we'll wait and see. And then franking is obviously the big one that's got a lot of investors really, really worried, particularly the mums and dads who've, worked pretty hard, built up a nest egg, have defined what their takeout is that's going to feed them and keep them housed. And retrospective legislation always hurts.
So you speak to a lot of company CEOs and management. What are they saying? Are they concerned? Again, it's the people in different camps. So there's the political footballing that concerns a lot of people, absolutely. So your bank officials, particularly your health insurance CEOs would be concerned about the uncertainty. And then everybody down the supply chain, so the hospital CEOs would be even more concerned. But then of course there's always the opportunity, because quite a few of the companies we hold have made interest-free loans to the government, which are these franking credit balances that have built up. And I think those we could see some very positive outcomes from them releasing a lazy balance sheet early. Matt, have you run into any CEOs who are particularly starting to focus on this as an issue?
Yeah, look, I think in terms of franking, even in the last reporting season, we saw, increasing payout levels, I think, and as companies sort of, had a view that this potentially, is something that they should do, is start getting the franking in the hands of investors. But as Rhett says, I think in the next reporting season for the half year, we might even see some really accelerated franking sort of releases. So
buybacks, off-market buybacks?
Yeah,
and the like.
more of that, and more maybe higher payout ratios where companies can afford it. One-off sort of, bigger dividends. So I think you'll see a bit of that. But I guess then, it depends what sector the company's in that we're talking to management. Obviously in the financial sector, the Royal Commission has impacted and other inquiries. And then I guess I mentioned the bank levy, what happens there. But I just guess, even in any sector, really, the threat of regulation is just become much more present. And, I think we'll see more inquiries and, of industries as the political football, as Rhett quite, succinctly puts it, these footballs start to really get kicked around in the as we move into the election cycle.
Matt, we know a lot of the viewers on Livewire will be affected potentially by the franking credit changes. But at the economy level, this is redistribution, isn't it? So it can actually potentially have a neutral or even positive impact on parts of the economy?
Yeah, look, maybe. I think that there's a chance of that. I think if we do get a change in government, I think potentially we'll see some industries where wage growth will, there'll be some demands for wage growth. I think unions will certainly be on the front foot under a new change in government. So we could see demands there. But look, at the moment, it can be easy to get a bit bogged down in this and bearish and things. I mean, at the moment, the economy's pretty good, and people do have money in their pockets. Interest rates are low, so that's good for now. It's what I guess the confidence sapping nature of a lot of changes in regulations can have an impact on consumers, and we know going into an election that we see people do stop spending to some degree.
Excellent. Rhett, in terms of what would you be doing and what advice could you give an investor with respect to these changes? Is it looking for some of these heavy franking credit, heavy balance sheets, for example?
That's a possibility, but what I would strongly suggest is to keep calm and carry on, because at the end of the day, in spite of some would say the media's best efforts and the politicians' best efforts, the economy is actually doing pretty well. Anybody who thinks that a strong government is necessarily going to do good things might also be overly optimistic. And so I think, a bit of disarray on both sides probably allows the free hand of capitalism to carry on and do what they need to do. So I think companies are in pretty good shape. I do agree with Matt's view on confidence sapping due to what's happening behind the scene and the uncertainty. But the economy is in pretty good shape. I just hold my nerve and stick to what we call toilet paper and toothpaste type businesses that everybody needs and loves.
They will after an election as well. Matt, any last comments for investors to consider about this kind of change?
Yeah, look, I'd be careful of the toilet paper companies, Rhett, with Asalio, what's happened to them in the last 12, 18 months. But Rhett's point is right. I think to look to make big portfolio shifts based on what could happen is a bit dangerous. I think what we've done is sort of look through the portfolio and just seen the susceptibility of a lot of the stocks to a left field regulation kind of view, and that's really all you can do. But the other thing is to keep an eye out for the market is well known to overreact to policy announcements sometimes, and they can provide opportunities. And I think the health insurance industry is a good case in point that the listed players are very solid looking companies with great sort of balance sheets, and so if any really bad news was to come to them, I'd be looking at them for a long-term sort of chance to pick up a company and a good company for a long-term hold.
Excellent. Well, the election will come and things might change, but there'll be opportunities as well as some things to consider and possibly change.